And it is time for the word on Wall Street. Top investors watching your money. Joining me right now, Bulltech Capital Markets Chief Strategist, Kathryn Rooney Vera. Well, this is the issue, right, Kathryn? I mean, you're looking at a Federal Reserve raising interest rates potentially into a slowing economy. We've got the March meeting beginning tomorrow. We're expecting that quarter percentage point rate hike, Kathryn. But what about that? What about 2 consecutive quarters of negative performance on GDP? That would be a recession, and that would impact earnings. Last week, Stephanie Pomboy told us to expect a profits recession at a minimum. Your thoughts?
Stagflation is our base case scenario. That's a growth at or below potential with high inflation. We're already there. Real growth last year approximated 6% in the U.S. That's massive. This year we're expecting growth to come below 3%. Recession is a real and rising risk, and I think it all depends on oil prices. The higher, I calculated differently. I have every $25 increase in oil shaves off half a percentage point of U.S. GDP. I expect oil prices to average $125 price per barrel this year. This is going to be probably a long and extended conflict. I see a natural hedge, Maria, between the U.S. Equities market and energy. So if you're going long U.S. S&P 500, you could short the energy market and vice versa. The reason I say that, Maria, is because if things get better, let's say that Russia agrees to some accord with NATO and they're allowed to keep a portion of Ukraine, and sanctions either don't happen or roll back, Russia has no reason to close the Ukrainian pipelines of natural gas, saving energy prices from soaring that much higher, because they could go a lot higher. We could have oil sanctions, natural gas sanctions, and then Russia responds in kind. Oil could go much higher, taking the S&P lower and energy prices higher. There's a natural hedge there. I like energy, I like utility staples and healthcare, because these are both defensive sectors and they outperform historically in stagflationary periods. Recession is a real risk. It's massively underpriced in the markets, and Europe is already in recession. That's my view.
All right, we will leave it there. Kathryn Rooney Vera, Michael Lee, great to see you all. Thank you so much.